Hello, and welcome to Week 2, Video 1 in Foundations of Financial and Managerial Accounting. It's on the multi-step income statement, the gross profit rate, and profit margin applied to PepsiCo's 2017 annual report. In your text, Exhibit 511 shows you a multiple-step income statement which is organized in such a way that makes it easier for you to find key totals and figures. The first thing you'll look at is net sales, also called net revenue. Its sales revenue for this company can just be service revenue or something else for another, less sales returns and allowances, less sales discounts. These aren't markdowns. These are discounts for prompt payment on account receivable only. Normally in most real income statements, we'll start with a net sales or net revenue figure without getting all the details that they show you in Exhibit 511. Net sales minus the cost of goods sold if you're selling goods or the cost of services sold, sometimes they just say cost of sales, gives us gross profit. Were your revenues enough, your net revenues enough to cover the cost of the goods or services provided? It better be, because there's regular day-to-day operating expenses from running your business. For PW Audio Supply, it's salaries, wages, utilities, advertising, depreciation, freight out when you pay for shipping for something you send to customers, insurance expense, and once you deduct these total operating expenses, we get income from operations. There are other types of revenues and gains, other types of expenses and losses. For instance, interest revenue is a revenue, but it's not part of PW Audio Supply's daily business. They're not in the business of making loans, and like a bank, nor are they in the business of taking deposits and paying interest like a bank for interest expense. So what we'll see, these non-operating activities are important to put into the income statement, but we separate the operating and non-operating items. To get income before income taxes, subtract income tax expense, and then we have net income. Well, you'll see this format is similar, but not identical. For most real company annual reports, looking at PepsiCo's 2017 income statement, we'll see some key items. Note, they even call it consolidated statement of income, but if you start with net revenue and the bottom dollar amount in total is net income, we'll see that this is an income statement. It is a multiple step because, well, they start with net sales, which they call net revenue. Deduct cost of sales. Your book calls this cost of goods sold if the company sells goods only. PepsiCo sells mostly goods. And you get gross profit. So $63.5 billion in net revenue, subtract cost of goods sold, $28.8 billion, you get $34.7 billion, which is more than half of net revenue. PepsiCo will have day-to-day expenses that they expect to incur every year, like selling general and administrative expenses. They also might have a one-time impairment charge, as they did in 2015. For 2017, take gross profit of $34.7 billion minus selling general and administrative expenses of $24.2 billion, you get operating profit, which is another word for income from operations, of $10.509 billion. Okay, non-operating activities. Because Pepsi isn't in the business of borrowing and lending money in its day-to-day operations, it needs to do it, and it receives some interest on bank deposits or money market deposits, but that's not their primary business. We segregate these in non-operating activities. After you take operating profit of $10.509 and adjust for the non-operating activities, revenues and expenses, we get $9.602 billion income before taxes. Notice that PepsiCo uses the word provision for income taxes instead of using the word income tax expense. I think you'll find this more common in real financial statements. If we want to look at net income for the purpose of doing ratios for your discussion posts, we want to look at the net income available to common shareholders. The total dollars of net income available to PepsiCo shareholders is $4.857 billion. Later on in the income statement, it's also put on a per share basis, which we can learn a little bit more about further in the course. But for your ratios, you're going to use net income attributable to the company's common shareholders, which is $4.857 billion for PepsiCo. One of the things a multi-step income statement makes it easier to do is to calculate profitability ratios like the gross profit rate. The gross profit rate is gross profit, do sales cover cost of sales, divided by net sales. So for PepsiCo, gross profit $34.7 billion, net sales, which they call net revenue, $63.525 billion, gives us a gross profit rate of 54.7% in 2017. You'll notice the gross profit rate is similar but a little higher in 2016. What does this mean? In 2017, for every dollar of net sales, PepsiCo has 54.7 cents left over after deducting the cost of goods sold. That 54.7 cents of gross profit must cover all other expenses before there is net income for shareholders. Using the gross profit rate, PepsiCo was slightly less profitable in 2017 than in 2016. Okay. Let's look at the profit margin. You might have heard this expressed in business talk, and that says don't just take the gross profit, take the net income. That's at the bottom of the income statement. You could still calculate this with a single-step income statement. What we focused on for PepsiCo is it's not just the net income, but the net income available to PepsiCo's common shareholders, which is $4.857 billion, divide by net sales, which PepsiCo calls net revenue, of $63.5 billion, we'll see the gross profit rate in 2017 was only 7.7%. This is a drop from 2016, when the gross profit rate was 10.1%. So in 2017, for every dollar of net sales, PepsiCo has 7.7 cents left over for common shareholders after deducting all the expenses including taxes. In 2016, they have 10.1 cents left over for common shareholders after deducting all expenses. Using the profit margin, PepsiCo was less profitable in 2017 than in 2016 by about 2.3 cents difference, 2.4 cents. Thank you for listening to the video. Please feel free to use this as a review before looking at other companies' annual reports for the weekly discussion board. Good luck and get started, Jaspers.